Area Hall 12 for your team. This is National and the team. We're doing our webinar. This is our third day in person, first one on the screen. We're actually using Teams. So if the link was easy to find or not easy to find, please give us an email, give us a DM on socials, or call, text, let us know how easy was it to get into the webinar today. We have switched over from Zoom Webinar Pro to now Microsoft Teams. A great day to talk about data presentations as we're on the cusp of the California Housing Advice Authority here in Sacramento, California, are launching the next version and kind of the newest way to try to assist Californians with affordable housing. It's going to be kind of an in-between program. That program simply is a GPA program that gives you 20% of the purchase price as a gift. Now, sometimes gifts are with those strings attached, this one's going to have it. The money towards the down payment of closing of your property, 20% of that number gives you 80% loan, 20% equity or down with no mortgage insurance. You can use 70% towards the down payment and 3% towards closing costs. You will have slight mortgage insurance if you can finance in as limited mortgage insurance or you borrow mortgage insurance and kind of what we can get into the details later. But the real thing I want to kind of highlight with that program is having a property that's $100,000, 20%. That's not free money. It stays with you. As you continue to gain equity, let's say you're 1, you're 5, also you're 6, feeling good, your property's worth $110,000 more when you buy it. Remember, that $100,000 is required to be paid back when you refinance or when you sell. So that first lump sum of all the equity you earn is not yours. It's going to the government. Then after you eclipse that number and 100% of their money has been paid back, you have a right to 80% of the equity going forward. They will continually have 20% stake in your home's equity. It's great to get in, but listen, there's a cost. Sorry, my third presentation already is going much time. There's a cost. I need you to understand this program before you dive in. You are going to be in ownership of the government. You will have a home. You will have a large portion of the home will not be your equity in your responsible payments. You will get the benefit of SALT, state and local tax deduction, which is a huge benefit from homeownership. You get to be able to write off the mortgage interest. If you're single, that's $12,000 annually. If you're filing joint, that's $24,000 that you're going to write off when you actually take ownership of a home. That is what people talk about in terms of homeownership. The age gratification, the tax benefit, the late gratification is the wealth creation, the legacy, homeownership, to pass it on to your family, to create that generational wealth. But with the new program, with the California, you're going to take a backseat for a long time for that equity portion. You will earn the right for the mortgage deduction. So please get more questions. Hop on over, give us a call, email, chat. We're here in Backville, Fairfield. We have offices in Southern California. Get a hold of us, we'll help. Now let's talk about the program I'm really excited about. Our GPA program for first home buyers and call badges. For summary, our GPA program assistance is eligible for residents throughout California. It's not tied to census tracts, zones, NorCal, SoCal, city programs. From the whole state of California, we're good to go. The program could enable you to purchase a home valued at $1 million. I'm not pushing people to go to the high value loan limits, their counties. Oh my gosh, my house with the EPA with 100% down payment covered. You need to approach this and figure out what are you comfortable paying. There's a qualifications. We qualify for way more home than you're comfortable paying. So we need to first figure out what is that payment amount that you want to make a payment on every single month. You have to take into account all the things that we ask you. Food, dog food, people food, gas, utilities, soccer fees, kid fees, life expenses. Those are all things you don't ask. So how much money are you going to spend a month on your mortgage and cost of living? Then we'll find a house and then a payment that matches that target number. Then you go shopping with the realtor, okay? Our program does give you a fully forgivable second mortgage after 6 payments. Now, if you buy a house, it takes 7 months typically to make 6 payments. But once you make that sixth payment, 100% of the DPA funds are forgiven. It's amazing. There's no second. There's no third that stays with you. There's no government ownership of a portion of equity. It's your equity. I would rather you own 3.5% equity essentially at day one. It takes you 10 to 7 to 5 years to basically be at par. It's a lot smarter to do, guys. Sorry. Eligibility. To be eligible for the program, the borrower must be only one. This is exciting. Only one of the four following categories outlined. Number one, personal home buyer. If you're in California, you're in America, the guidelines are universal. Personal home buyer is anyone that hasn't had ownership interest in the property within the last 3 years. You can be a first home buyer again. You can be a first home buyer for the first time. If you meet that caveat, nothing else matters. You're a first home buyer. It's for you. The second one is really exciting because you can be a first home buyer, or you can't be, but you can also be current, retired employment, or voluntary non-paid member of certain job fields and get into the home. So let's say that life happens, divorce, this or that happens, you need a house, but gosh, you own a house 12 months ago, 13 months ago. Do you wait a year and a half, or do you hop right in the house and be the first home buyer with extenuating circumstances? With the right job, we're good to go. And here it is. Any borrower on a loan application that is current, retired, voluntary, or non-paid employee will qualify. Please see below. If you're military, now most people say, wow, military, but that's the VA loan. Not exactly. I've helped dozens of veterans that were situations, maybe they had a house that had in bankruptcy with a VA loan attached to it, a short sale, a deed in lieu foreclosure, a life happens where all of a sudden they lost a certain portion of their entitlement. So they can have their VA eligibility to use for homeownership, but they have a certain portion of money they need to pay back to get 100% of their entitlement back. So sometimes it does make financial sense to proceed forward and utilize their VA benefits for homeownership because they might have to pay back $40,000, $50,000, $60,000 to obtain that 100% eligibility again. This program helps them. They're military personnel. They can get homeownership 100% financing with us. 3.5% is a grant, same position. It is forgiven under 6 payments. First responders, police, fire, public safety, officers, paramedic, emergency techs, or similar. You guys all qualify. Educators, no longer is it just the teacher's loan and everyone else, sorry. If you're in education, from the principal to the janitor, you're good to go with us. If you're a medical profession, we have an amazing doctor's program. On the way. This program, if you're a doctor, you're the janitor at a medical facility or similar, you're good to go. You could own a self-employed daycare service and get 100% financing with us. Civil servant in a federal, state, or local municipality, this is pretty cool. So here in Backwood, California, Northern California, we are located in really close proximity to one of our nation's largest military bases, Travis Air Force Base. So there's a lot of people that work at Travis and military bases throughout California that are not enlisted. They're civil servants, right? So they don't have the VA benefits as an Air Force personnel that's enlisted, but boy, they serve our community. We have people at the city level, state level. They work at police stations. They're not a sworn officer, but they serve the community in an amazing way. This program helps them. Okay, it's awesome. When you really look at what we can do for people, just give us a call. We'll go into more detail. Here's an example. It's just an example. A DPA example is $6,000 purchase price. Let's go to the traditional first. So I want to keep kind of apples to apples on things that could. 600K purchase price, 3.5% down is estimated 21,000, right? Closing costs. We're projecting our pay closing costs, not lender pay, have the rate as low as possible. So therefore, the clients paying their title, escrow, appraisal, taxes, insurance, owner's policy, and they're paying for any kind of banking fees to keep the rate as low as possible. Let's estimate that $21,106 and change. Total out of pocket is $46,000 and change for that property. At 600K, it's a lot, right? Our program, same property, 600,000, 3.5% purchase price, 21K. Now, typically, 100% of the funds are required by the client. Now, thus, 100% of that 3.5% comes from our DDA program, which is a grant. Closing costs. This is where an awesome realtor is really vital to the success of the transaction. We can provide an amazing loan. We need the realtor to really negotiate on behalf of you guys, to really explain a win-win scenario to the seller of the subject property, to explain, hey, I'm an amazing client, pre-approved, ready to go. What they are looking for is an XYZ closing cost credit to bridge the gap between the cash required at closing and for you to get that property sold. Do you want the property to go on the market for another week or two and do a price improvement and end up lowering the price of the property equal to what we're asking you to do right now? You can explain that and articulate that situation, which we've seen scores and scores of times. It works. Maybe not 100% of the closing costs be covered by the seller, avoid the price cover 50%, 75%. Your client could walk out total closing costs required cash at closing at zero. That is not included. I really suggest doing a voluntary home inspection, and you have to have an appraisal. So inspection and appraisal, maybe $1,500 out of pocket if you get the perfect scenario. Let's say the client pays for a third of closing costs, or you pay for half, and maybe it's $10K out of pocket for a $500,000 home. That's amazing. It's a lot better than $46,000, right? Okay, eligible programs. This is FHA only, but the details are amazing. Is it traditional FHA only, or is it also the FHA 203K standard limited? Yeah, it's amazing. So you can actually find a property, get pre-approved, get DPA, down payment assistance, cover 100% of the closing costs, have a contractor, general contractor, write a bid, submit it in the transaction, get the house, then have it fixed up the way you want it. I mean, it's expensive enough to get a house, let alone spend $68,000 into it to make it ours. They do that. You can finance that into the loan. Just understand how the 203K program works. If you need kind of an overview of that, give us a call. If agents are on call, anyone, please give us a call. We'll explain an amazing way to empower your potential clients to buy properties and find that kind of ugly house on the block, turn to the best with using OPM of people's money. You finance that cost in the property instead of out there legal cash. You can use this program for DPA. It's absolutely amazing. Okay, the parameters. Try to keep it simple. 620 minimum FICO score to qualify. A lot of the programs out there are 660, 680, so it gives us a little bit more leverage to help a greater amount of Californians acquire homeownership. This is a 30-year fix only. You know, it's not, no arms are allowed, even though arms, I think, are awesome because they have lower rates right now. But no, 30-year fix only, purchase only. Everything else is pretty standard. LTVs, CLTV. Our DTI is 48.99. Some programs go to 50. We're at 48.99. That little difference, I don't think it makes a difference. Okay, property types. You gotta pay attention on. My apologies. Property types. So the 1 to 2 unit is pretty awesome. So you buy that property, it's SFR, condo, single family residence, and you end up buying that property as a 2 unit. Well, all of a sudden, you're buying it to occupy with 2 units. One is owner occupied, one is not. You're going to be a best owner from day one. You live in 1 unit, rent the other one out. Mandarin Housing is available single-wide, multi-wide condo projects. FHA and condos are immediately approved. Okay, that's it. I'm a few minutes over. Please get a hold of us if you have any questions in regards to these programs. We have another webinar coming up in an hour about one-time construction close. Pretty awesome. We have a lot of these available here at System Financial. We love to serve you, provide you and your clients. You are the client.